We've been expecting Bank Nifty to start participating over the last couple of weeks. It's been lagging slightly behind, and this afternoon as well, no different. Bank Nifty trading lower, while the Nifty itself trading with significant gains. 0.3% on the Nifty 50, the Sensex trades with a similar sort of breadth. The broader markets look good. The breadth of the market is good. Mid-cap, small-cap, micro-cap index all participating in today's rally. Actually, the mid-cap index is slightly muted, but it did start off the day on a positive note. The rally is being led by the frontline names, and IT is one sector that's a clear standout in trade. Well, it'd be interesting to see if it's the FIs who've come in and supported this market, because we maintain that usually when you see FI activity, it's focused on the large cap names. That's the breadth of the market. Not much improvement from the get-go this morning, but the ones that have led the rally today is very surprising, interestingly, LTI Mindtree. Remember, LTI has been lagging the IT pack over the last 6 to 8 weeks for various reasons. This week as well, when Nifty IT did well, LTI Mindtree didn't participate on back of exclusion from the Nifty 50. Today you had a Kotak report and some amount of catch-up that's playing out for LTI Mindtree. The stock sees a gain of 7.5%, pretty much making up for all the under-participation the stock has seen. Wipro as well having a good day, 4% higher is what we have. Pharma looks good too. DVs had made a record high towards the end of last week. Today seems no different. Infosys is up 2.5%. Bharti is not doing too badly. Some of your auto names are holding themselves together. Sun Pharma, HCL Tech. So traditional legacy IT names are the ones that are leading from the front. On the sell side, you've had domestic facing companies that are seeing some pressure, so consumption and auto as a space may not be doing too well. Some of your banks, ICICI Bank is lower for obvious reasons, and you can see that on Bank Nifty. RIL ahead of its AGM tomorrow trades marginally lower. BPCL, HPCL you'd have imagined would do okay because of lower crude prices today, but that trade hasn't played out as we see it. And you've also got the likes of an SBI, Cement that trades soft. But Hersh, I think the day belongs to tech. We thought it would be Bank Nifty that would lend its support to the Nifty, but surprisingly the leadership is coming from IT and the leadership is coming from LTI Mindtree, and I think that's what one needs to take notice of after many ones.
Absolutely, Samina. IT, what a stellar kind of move that IT has given today. But Nifty versus the broader markets, it's been a tale of two cities, in fact, tale of two markets, if I can call it, in trade today at least. Look at that. Look at the Nifty mid-cap. It's just come off from those highs, and if we look at the small cap as well, largely we'll see a similar trend to play out. There you go. That's the Nifty small cap 250. Now, in terms of where we are on the Nifty 50, let's pull up that graph, and it's very different. There you go. Completely different pattern in terms of the way it's played out, and the entire rally out there is largely an IT-led rally. Now, let me take it to the broader market, stick with them in fact. Let me talk about some names which are in focus and doing very well. First off, I want to talk about NBCC. Well, bonus keeping the stock in news, but a 10% move. I'm not so sure whether that is warranted.
No, but Hersh, I'll tell you, we saw this last week. Was it CAMS or CDSL? I'm not sure, but there was a bonus issue there too. The stock rallied 30%. And of course, then the investors did get a 1:1 bonus issue. I think it was scams, if I'm not mistaken. So this is the trend. I think the markets knew that we don't know what the ratio it is. It's not whether the bonus issue is going to happen, right? Is it a 1:2? Is it a 1:1? Is it a 2:1? Is what we'll have to wait and see. But on back of that, the stock is doing phenomenally well. That meeting for the bonus issue is scheduled for the 31st of this month. Very quickly on the broader market performance, and I think this is where the FIs are probably buying. Last 3 days has been an exception where FIs have been actually buying into the Indian markets.
Yep.
We've not seen the large cap outperform significantly, and we've always maintained, I think from mid last year, where if FIs have to come in, large caps will move up because they usually prefer that space of the market.
Yes.
And we've seen that in numbers. Yesterday, DI is sold. Today as well, I'd be more than likely that DIs would have a sell number while FIs could be the buyers in the market. And they're coming into a sector that's been on the radar, has been a phenomenal story over the last decade. I mean, IT is one of the only sectors that's on a positive return over the longer period of time. We're getting closer to US elections. Green shoots is what we keep talking about. And we talk...
And rates.
I mean, I don't know whether there's a direct impact, right? I mean, there will be a Fed rate cut. But does that mean that IT companies are going to immediately start spending and giving money to their IT players in that sense. But it is a story, and should in fact get out a bite from Sudeep of Soalia, who spoke to us earlier, to understand why IT is on a run. But we have Gurmeet Chadda, who joins us from Complete Circle with his perspective. Gurmeet, hi, it's Samina. I mean, I know numbers don't mean very much these days, but what I think this record today on the index and what stands out is it's the leadership is coming from the large cap names. And I think that's worth taking a notice of, right? Because from mid last year, I know most advisors were telling clients to build up on the large cap names, hoping for an outperformance or a catch up. It hasn't happened until now, I would imagine. Do you agree? Do you feel like it's now time to do a portfolio rejig and keep the focus with the large cap space? Are they ready for a comeback?
I think, Samina, you're right partially. There's some, obviously, divergence will happen. It's also very fast sector rotation towards defenses, which has also led to this because, if you remember, very few people were willing to touch IT or Pharma or FMCG about 6 months back. You had the likes of Infosys at 1,200, T-Shapes at 3,000, the tech Mahindra and SLs of the world at around 1,000. So that's the reason it's extremely important to diversify. You don't know which sector goes out of favor, which some say such as fast. Also, if you see globally, there is mean diversion happening. So if you see last 5 years, in US, it was largely the top 10 companies, or if you call the 7-8 big tech, which are doing well. And the Russell 2000 index, if you see, was 1,500 pre-COVID, and now it's only 2,200. Right? It was hardly, 10% kind of an annualized return in, let's say, Russell 2000. And you compare this Nifty 500 index, it's become 4x in 4 years. Right? So I think and if you see in US now, the Russell index has started going up a little bit when the correction came, last couple of weeks back. So I think in India also you'll probably see, some favor large caps getting, largely because of the valuation comfort. Nifty still, although it's not cheap, but still at, let's say, about 20 times forward. Compare this to a small mid-cap index, which is 25, 27 times, so it's expensive. Third, I think there is very little earning support coming. So if you see Q1, for example, the EPS growth of BSE 500 was just like 5%. And you have like 300 stocks out of 500 stocks which are trading at 50 times earnings. So you've got to be a little careful. And it's good to rotate a little bit from small and mid to possibly slightly larger names. Also at the same time, just reset the expectations of returns also a little bit. I think that's one risk in the market, that suddenly we are assuming 30-40% returns to be the new normal.
Right, Gurmeet. Hersh also joining in. Gurmeet, it's a rotational market as well. You did mention it. Sectors that you're looking at, and I know we don't ask you this, we do ask you this enough every time you come, but any new sector that you're looking at, especially with some amount of keenness where value is concerned?
Sure. It's hard to find by us, to be honest, value in these markets. But yeah, so I think you've got to be a little ahead of the sector rotation because, as I said, very few people had a view on IT 6 months back. Today, IT is the best performing sector this quarter. I think financials, especially NBFCs, can make a comeback. NBFCs in particular because they are dependent on wholesale sources of funding versus banks who still have CASA. So I think NBFCs, once the rate cut cycle starts, they'll be more beneficiary of lower cost of funds. Also, I think liquidity has been very tight, up minus 2 lakh crores now for a long time. That should benefit. And secondly, I think some banks should make a bit of a comeback, especially private banks. And there's some niche themes which we are getting into, something related to, for example, data centers. We are extremely gung-ho. The environment recycling theme, whether it is lead, whether it is plastics, whether it is water management, that's another one which we are getting a little positive about. And we are also certainly looking at, some themes in auto and self-trade that trying to, do some expansion. So you got to be level 2 in terms of stock picking there. But broadly, I think if I were to pick one big theme, if I were to, which can do well, let's say next in the medium term, I think should be financials and rate sensitive.
Financials and rate sensitive. That's interesting, and it's good to get forward-looking comments. But before we talk about that in a little more detail, Gurmeet, I want to talk to you and understand from you where your biases sit if you had to buy IT today. Now, this is one sector that's been given positive returns over the last decade. There have been ups and downs, of course, but the sector as whole has stood out. If you have to pick your bets over here, where would the bias lie? Do you feel like larger companies will see legacy businesses, legacy clients come back? Or is it going to be all about this AI theme that maybe the mid-cap or the tier 2 IT companies are focused on? I also ask you this question in context that while these companies have posted 3 to 5% top-line growth, they are commanding multiples of 15 to 20 times. Double-digit growth going into FY 26-27 still looks tough, in my opinion.
No, I agree with you there, and that's why I'm saying IT services offer very little valuation comfort because, as you rightly said, the growth would be best case single digit, and the valuation multiples now are, let's say, for example, 25-30 times. I mean, maybe an exception would be Tech Mahindra, a little bit HCL, but even those now are 20 times rather than they were 12-15 times some time back. So plain IT services market is probably expecting a recovery in US markets, and it's more in hope that, there will be revision rather than actual data coming in. And I think any bad number or any bad guidance could hurt you if you enter at these prices. So I'll be more keen, as you rightly said, on niche play in IT, people who are more IP driven, people who are more into software parts. So we like something like a KPIT technology, which is an auto embedded software play. It continues to grow 25% in an environment like this. And if you see, and you speak to the auto guys, I think the spend on ERD and especially on case is amongst the highest. So the guidance is also pretty good. Secondly, we also like some of the new age businesses in this space. I think Zomato looks pretty good to me. I think quick commerce is very good, and I think with ticketing and I think they're also trying to get into an advertisement app. If you see the new thing that they've launched, they're trying to launch an app within, it's like an ad tech, if I were to call it. So it's different market. So I would be very niche and more product and IP driven versus just plain buying IT services.
Okay, Gurmeet. And Gurmeet, what do you make of the move? What do you believe are downside risks? Of course, valuations is one thing you highlighted from an IT perspective, but what should one see? Also, wanted your take. So, Samina and me were just speaking at the start of this show about how rate cuts could lend some support to IT, but at the same time, rate cuts typically happen when there's a growth slowdown. So rationalize this for us. What should one expect and what's the downside risk here?
I think we've not really seen a serious correction for a while, and I think somehow when you think there is no risk on the table is when risk is highest on the table. But the thing is, since everybody is expecting a correction, also means that you are not really very fully leveraged. So I think in terms of leverage, I think system is a lot better. I get a little perturbed by what is happening in this SME IPO space, with 12, 15, 20 crore IPOs getting 3,000-4,000 crore bids, people going for listing gains, people doing, this short-term, investing in small micro caps. I think that is something to me is a bit of a worry, where you tend to take disproportionate risk in the market. I think there is a serious chance of a healthy correction happening in the market. It's been a while. But, nobody knows. And I think, 10% correction literally happens every year. It hasn't happened so far this year. So I think it's due. But as I said, I don't see any issue with the long-term story. Only thing I want people to do now that it's clear that we'll have some rate cuts, take some exposure to bonds, have some gold also in the portfolio, have some asset allocation in place. I think parking everything in equity, assuming very high returns, and hoping that this will come year after year is the biggest risk right now in the market. So take some long-dated bonds. There is probably double-digit return there if there is a rate cut happening. Gold with the kind of geopolitical tensions we are seeing across the globe. Diversify a little bit, balance a little bit. We have made money. It's important to preserve also this money which we have made over the last couple of years.
You're right, and the recent new investors in the last 5 years have never seen a correction, so they don't even know what it's like to deal with one, because those are truly tough times, and I think that's where the role of advisor like yourself becomes even more critical. You talked about how you liked rate sensitives, and I'm going to pick up with banks. The whole industry believed that private banks, and everyone likes private banks, right? That a time will come and the trade will happen. It's not happened yet. What, in your opinion, is the biggest restrictive factor for private banks, and when do you see that changing?
I think the deposit growth, once it picks up, I think is something we should track, because in absence of a deposit growth and RBI being very particular about that your CD ratio should be 85, 90%, which means the banks will have to slow on credit, right? Which essentially is not good news for financials coupled with high cost of funds. So I think when liquidity eases, rate cuts happens, even the deposit gets repriced with a bit of a lag. So that's why I said NBFC is probably a better position right now, because they are more dependent on wholesale sources of funding versus banks, which are more granular. Also, I think the deposit franchise will, your liability will differentiate the banks. So look at, for example, what ICICI has done over the last 3-4 years. They've led the market not only on the retail asset growth and overall asset growth, even on the liability side. They have the best-in-class CASA ratio now. Better names, much granular liability franchise. Tier 2 bank amongst, for example, look at Federal Bank. They were largely dependent on wholesale deposits. Today, retail deposits make up 80%. And if you see last quarter, that's the only bank which delivered 20% deposit growth. Obviously with a slightly smaller base. And now with new leadership of Mr. Manian, the bank still trades at about 1.2, 1.3 books. So there is some value if you go level 2, level 3. Look at liability side for a differentiation, for the bank. I think that will decide which banks outperform, because CASA and deposits are the fuel and the raw material for the bank.
Gurmeet, I think the NVIDIA of India has been trend. 150% returns year to date. Every time it posts earnings, it gets an upgrade. This afternoon, as we see it, there's a Bernstein upgrade. The stock is up 7%. And I think with a stock like Trent, you shouldn't be discussing valuations. They don't stand, right? What does one do? I mean, I'm sure just like NVIDIA, there's a feeling of FOMO. People who own it, good for them. But what about people who don't own it? Do you think right now could still be an opportunity to make money? Or guess what? You have Style Bazaar, which is playing a similar space but a different space. What do you do?
See, I think it's as you rightly said, just continues to defy gravity. And I think to give some credit, I think Zudio has the best. So once you keep outperforming the market expectations quarter on quarter, and then re-rating keeps happening, and that is what is happening with Trent. We saw that some time back with Titan, in the heydays when Titan used to do that, right? Just clock 30, 40% kind of earnings growth quarter on quarter. If you see the EPS growth of Titan, for almost 20 years, they did 28% EPS growth, right? And that's when market rewards consistency, market rewards if you continue to outperform the expectations, which is what I'm not comparing NVIDIA with Trent. I think very early days for Trent, different businesses. But I mean, I would not have the courage to really put money at this price. Also, we manage public money, so we have a bit of a fiduciary responsibility. So I'm happy missing out on some upside versus buying businesses extremely high. And one learning in this market is that even if you buy a great business at an obnoxious price, you will underperform. So you have to be careful on valuations. And it may look in the short term that you have missed out, but I think basics help if you stay grounded and stay rooted.
Right. Some words of caution. Thanks for that, Gurmeet. It's been a pleasure speaking and getting all that perspective.
Thank you. Thank you so much.
Right. Let me also welcome on board Vijay Chopra, Ruchit Jain, Vijay Chopra of Enoch Ventures, Ruchit Jain of 5 Paisa. Let me first go to Ruchit. Ruchit, just with regard to where markets are at, we've reached all-time highs today. 25,100 breached. What next?
Yeah, hi, very good afternoon to all of you. Well, there's no doubt about the trend for the market, that it still remains positive. We have hit a new all-time high today, and that also been led by a broader market participation in last few trading sessions. If you look at last one and a half weeks, although the up move has been very gradual on the Nifty index, because I think another banking space has not shown that positive momentum, but still led by some of the other sectors such as IT is there and some other heavyweights, we have seen a gradual up move in Nifty. But the market breadth has been quite good. The mid cap and the small cap stocks have been performing quite well. which clearly indicates a broad-based buying interest in the markets. Now, whenever we see index hitting its all-time high, we usually take out the retracements of previous corrections, technically, which is one of the method which can help you arrive at the next resistance or the target levels. And that gives us target of around 25,400 for the short term. So I think this momentum could continue on the higher side till at least 25,400 in the near term. And that's where we expect the Nifty to head in next few trading sessions.
All right. Vijay, at the start of this show, we were just trying to break it down in terms of where SMID stocks, broader markets are underperforming and rather in the negative. We've seen a kind of a U-turn taken by the broader market indices. We've seen a very good strength in the sense from the Nifty 50. What do you make of this divergence of sorts? Vijay,
I won't call it a divergence because we haven't fallen at all, and there has been no serious correction. And I've seen companies who are trading at not only the lifetime high prices but lifetime high price to earnings. The earnings have to match up. But there are pockets of excellence. Even in the worst of markets, there are companies which give you good value, and you should chase value rather than valuation. So this has been my mantra since almost 3 decades, of my being into the markets. Chase value and not valuation. So as you said, that market has taken a U-turn. I don't think 62 points here or there. How does it matter? So even a couple of percent down, market gets down by a couple of percent. The kind of buying which emerges, due to the inflows which the mutual funds are getting. So being a fund manager myself, I've worked as a fund manager also for a number of years. So what to do with so much of cash? So I was listening to Gurmeet. I kind of second one thought that, you should start accumulating gold, silver. Silver seemingly looks better on the chart. You can buy ETF, silver ETFs, you can participate in the market at the same time, stay away from all the chaos and the possibility of a correction. So there would be a correction for sure. But again, there are pockets of excellence. I think that, mid-cap IT is giving a lot of, the possibilities. There are good stocks there. I think that, interest rate sensitives, because India definitely RBI would follow what the US is doing. So if at all interest rate starts coming down there, I'm sure that, our RBI would follow them. So interest rate sensitive sectors are there, pockets of excellence in telecom. I think that, Geofin looks good. I think that some metal stocks which have corrected give you good opportunity. So there are companies which still have good valuations one can latch on to and keep it for medium to long term. So definitely don't chase valuation, chase value is my recommendation today.
Richard, the talk of the town today is IT stocks, and they're leading from the front. So your LTI, Wipro, Infosys, even some of the mid-cap names like Birlasoft, LTTS are looking very well placed. I'm not sure what's happening on Tata Elxsi, which is down about 8%. But if you're buying strength, would you consider fresh longs on any of the IT stocks I mentioned? Not for the next 2 days, but even for the next 4-5 days or up until the Fed policy outcome. Any IT stock that you would load up on today? Richard, that question was for you.
Yeah, sorry. So I think, yes, overall trend for IT stocks still remains positive. And I think from the large cap space, Infosys is one stock where we believe that still there is good steam left on the higher side. The high top, high bottom structure is getting continued. The volumes are good. And if I look at the monthly charts of Nifty IT index or heavyweights such as Infosys, then a cup and handle breakout has recently been seen on the monthly chart. So whenever you see such a huge breakout on the monthly charts, such trends usually last for a few months at least. So I think Infosys has potential to rally towards 2100 to 2050 range in the short term. So this is one stock from the large cap stock, large cap IT names, which we think that the outperformance would continue. And from the mid-cap IT space, Emphasis is another name where we are bullish on. The structure looks quite positive. If you look at the volumes in the recent up move, when the stock was going up, the volumes were decent. On corrections, we have not seen any kind of volume-based selling. The 40 or 50-day exponential moving average has recently acted as a good support. So I think here also the monthly charts indicates that probably the previous swing highs, which are around 3,400, 3,500, that could be seen in next few trading sessions. So Infosys from the large cap space and Emphasis, these are the two names where I think we could see some more upside in the short term.
Okay, Infosys and Emphasis. Okay, but let's quickly move on. We slip into a short break, of course, but we spoke with Sandeep Agarwal of Sovilo Investments earlier today on the outlook on the IT sector. Of course, the IT sector 2% higher in trade. Listen into a slice of that.
If you recall our multiple conversations which have happened in the past, I think the sector has started making a comeback almost 6 months back. And this sector is a very typical sector which generally moves in a lag effect with the US big techs. And if you see, the big techs were doing quite well in terms of reporting numbers for last 5 to 6 quarters, and our industry was not doing well for last 8 to 10 quarters, which started with a very high attrition. TCS witnessed a 29% attrition few quarters back only. And with, in last 6-8 quarters, you would have seen that our attrition has now cooled off substantially. Now it has come back to the slightly below normal level. And that has triggered the higher margin this quarter, which you witnessed. And in my view, in this quarter, again, you will see a positive surprise from all the tech companies on the margin front. As far as revenue front is concerned, last 6-8 quarters have been muted. So you will see 2-3 quarters of good year-over-year growth. But let me reiterate, the global IT services outsourcing piece grows at 6-7%, and we grow at 8-9% because we gain some market share every year. And that gain of market share is also very, very minuscule because, we are almost like having maximum of that. So I think this is a sector where you should look at 8-9% kind of revenue growth and 11-12% kind of profit growth. And if 1 or 2 years the returns are not coming, then you can be rest assured that the third year everything will get clubbed and come together. So I think we are in that situation since last 2 quarters, because prior to that the sector has not given any return. Now in last 2 quarters we are seeing more than 15% return for most of the companies, and I think another 10% is something which I believe will happen in the services space. So we are very comfortable in the large names which are reasonably priced, like the HCL, TechM and all. But in the mid cap, the IT services, I am not very bullish because they have never corrected and they are still expensive. ER&D is obviously a different story. ER&D is a structural 10-15 year story, and it can grow at double the rate of IT services. So obviously the multiples are high. So I would rather, look for large cap which are reasonably priced, and in mid and small cap, if I can get a play on ER&D at a reasonable value, that is what I would like to play. And because we run a PMS, so very hard to call out names, because our client and we may be holding something, so very difficult to call out names, but the broad framework should be like this.
back. You're watching India Market Close. It's a good-looking midweek day of trade. Pretty much came out of nowhere, rather unexpected. We didn't have much of a handover from world markets, but the Nifty gradually has recorded a new high today. Well, while all the market action keeps us busy, as we wrap up the last 30 minutes of trade, it's the Railways Minister Ashwini Vaishnav who addresses a press conference on cabinet decisions. Let's hear him out.
Pro projects और एयरपोर्ट्स के और दूसरे प्रोजेक्ट्स टोटल करीब 2 लाख करोड़ के इन्वेस्टमेंट के फैसले लिए गए। इसी कड़ी में आज बहुत ही महत्वपूर्ण फैसले लिए गए जो रोजगार को और जो मैन्युफैक्चरिंग से रिलेटेड एक्टिविटीज हैं उनके ऊपर उनका मेजर इम्पैक्ट होता है। आप इंफ्रा में भी अगर देखें अब तक के जो प्रोजेक्ट्स अप्रूव हुए हैं उसमें कितना एम्प्लॉयमेंट जनरेट होता है, ये आपके साथ शेयर करेंगे स्लाइड, जिससे कि आप डेटा को यूज कर सकें। आज बहुत बड़ा मेजर एक फैसला लिया गया है मैन्युफैक्चरिंग के लिए 12 इंडस्ट्रियल स्मार्ट सिटीज। आप सब जानते हैं नेशनल इंडस्ट्रियल कॉरिडोर डेवलपमेंट प्रोजेक्ट, ये प्रोजेक्ट एक ऐसा प्रोजेक्ट है जो कि भारत की पूरी फ्यूचर डेवलपमेंट को पॉजिटिवली इम्पैक्ट करने वाला है। जो मेजर हमारे ट्रांसपोर्टेशन के बड़े रूट्स हैं, आप जो ये देख रहे हैं लाइंस, ये सारे के सारे इंडस्ट्रियल कॉरिडोर्स हैं जो समय समय पे अप्रूव किए हैं। उनमें अब इंडिविजुअल नोड्स, मतलब कॉरिडोर अगर हम देखें, जैसे मान लीजिए ये कॉरिडोर अगर हम लेते हैं मुंबई से बेंगलुरु वाला कॉरिडोर, इस कॉरिडोर पे अलग अलग नोड्स डेवलप हो रहे हैं। वैसे लेते हैं, मान लो लुधियाना से लेके कोलकाता, अमृतसर से लेके कोलकाता वाला कॉरिडोर, इस कॉरिडोर पे अलग अलग नोड्स क्रिएट हो रहे हैं। जैसे अगर हम दिल्ली मुंबई इंडस्ट्रियल कॉरिडोर को लेते हैं, उसके ऊपर अलग अलग नए नोड्स। तो कॉरिडोर और नोड्स, राइट, इस पॉइंट ऑफ व्यू से आज बहुत बड़े फैसले हुए हैं। 12 नए इंडस्ट्रियल एरियाज, 12 न्यू इंडस्ट्रियल एरियाज ऑन दी इंडस्ट्रियल कॉरिडोर्स। ये 12 नए इंडस्ट्रियल एरियाज कंबाइंड, इनमें इन्वेस्टमेंट सरकार की तरफ से आएगा 28,602 करोड़ का, 28,602 करोड़ का। और वंस दीज कॉरिडोर्स एंड नोड्स आर डेवलप्ड, उसमें इन्वेस्टमेंट पोटेंशियल है 1.5 लाख करोड़, 1,52,757 करोड़, और करीब 10 लाख एम्प्लॉयमेंट का इसमें पोटेंशियल है। बहुत ही इंपॉर्टेंट प्रोजेक्ट्स हैं ये। इन प्रोजेक्ट्स की यहाँ पे डिटेलिंग आपके सामने रखी, मैं इंडिविजुअल प्रोजेक्ट्स का आपके सामने एक एक करके रखूंगा। एक तरीके से आप देखें तो देयर इज अ ग्रैंड नेकलेस अराउंड द एंटायर कंट्री। देश के नॉर्थ, ईस्ट, साउथ, वेस्ट, सेंटर, हर हिस्से को कवर करते हुए ये प्रोजेक्ट्स हैं। और इसमें प्रोजेक्ट्स को डिजाइन करने के टाइम में, सेलेक्ट करने के टाइम में इस चीज का बहुत विशेष ध्यान रखा जाता है कि वहां पे ट्रंक ट्रांसपोर्ट इंफ्रास्ट्रक्चर होना चाहिए। जैसे फ्रेट कॉरिडोर है, जैसे एक्सप्रेसवेज है, इनके दोनों तरफ का जो एरिया है, इनको इंडस्ट्रियल कॉरिडोर और उसमें इंडस्ट्रियल नोड्स डेवलप करने का प्रोजेक्ट है। आपको बताया जैसा करीब 10 लाख डायरेक्ट जॉब्स और 30 लाख इनडायरेक्ट एम्प्लॉयमेंट पोटेंशियल इससे क्रिएट होगा। और अब तक के जो शुरुआती दौर में जो प्रोजेक्ट्स बनाए गए थे, उसमें जो भी लर्निंग्स आई, जो भी एक्सपीरियंस हुआ है, वो सारा एक्सपीरियंस इन प्रोजेक्ट्स में लगाया गया है। बहुत फोकस होगा प्लग एंड प्ले एंड वॉक टू वर्क कॉन्सेप्ट्स पे, प्लग एंड प्ले एंड वॉक टू वर्क कॉन्सेप्ट्स पे। अगर हम देखें, आज दुनिया में सब जगह से मैन्युफैक्चरिंग एक्टिविटी भारत में शिफ्ट हो रही है, चाहे इलेक्ट्रॉनिक्स मैन्युफैक्चरिंग हो, चाहे मोबाइल मैन्युफैक्चरिंग हो, डिफेंस मैन्युफैक्चरिंग हो, ये सब भारत में शिफ्ट हो रही है। एंड दीज कॉरिडोर्स एंड दीज प्रोजेक्ट्स, इंडस्ट्रियल एरिया प्रोजेक्ट्स, दे विल एक्सेलरेट दैट शिफ्ट, क्योंकि यहाँ पे प्लग एंड प्ले, रेडी टू स्टार्ट, वॉक टू वर्क, एब्सोल्युटली अच्छे नए प्रिंसिपल्स, मिनिमाइज्ड क्लियरेंसेस, land acquisition already done, last mile connectivity provided, multimodal infrastructure जिसमें गैस, वाटर, पावर, टेलीकॉम सब चीज प्रोवाइड होगी और बहुत इकोलॉजिकल इम्पैक्ट मिनिमम हो, इस तरह से इनको डिजाइन किया गया है. दिस इज अ वेरी नाइस विजन जिसमें देश में बहुत बड़ा डेवलपमेंट मैन्युफैक्चरिंग के क्षेत्र में होगा और उससे एम्प्लॉयमेंट जनरेट होगा. ये सारे की सारे फीचर्स हैं, प्लग एंड प्ले, पोर्टेबल एंड रिसाइकल वाटर सप्लाई, पावर सप्लाई, कॉमन एफ्लुएंट ट्रीटमेंट प्लांट्स, जो कि बहुत बड़ी प्रॉब्लम होती है विशेषकर छोटे इंडस्ट्रियल प्लांट्स के कंपनीज के लिए, मल्टीमोडल कनेक्टिविटी, वॉक टू वर्क, गैस पाइपलाइंस, एनवायरमेंट क्लियरेंस, सिंगल विंडो क्लियरेंस, लैंड मैनेजमेंट के प्रॉपर डिजिटल फॉर्म्स, एंकर इन्वेस्टर्स के लिए डिस्काउंट्स, बहुत सारी चीजें इसमें ध्यान में रख के इनको बनाया गया है. पहला खुरपिया उत्तराखंड, ये 1000 एकड़ में बन रहा है. 1265 करोड़ रुपए की इसकी प्रोजेक्ट कॉस्ट होगी और करीब 6180 करोड़ का इस प्रोजेक्ट में इन्वेस्टमेंट आएगा. एम्प्लॉयमेंट पोटेंशियल 75,000 का है. फोकस ऑटोमोबाइल, ऑटो कंपोनेंट्स और इंजीनियरिंग एंड फैब्रिकेशन सेक्टर्स पे इसका रहेगा. सारे डिटेल्स हैं इसमें और ये सारी स्लाइड्स आपके साथ शेयर भी करेंगे जिससे कि आप डेटा का प्रॉपर्ली भी उपयोग कर सके. सेकंड है राजपुरा पटियाला पंजाब में. इसमें भी करीब 1099 एकड़ यानी 1100 एकड़ के आसपास टोटली डेवलपमेंट होगा इसमें और 1367 करोड़ का ये प्रोजेक्ट है. टोटल 7500 का इन्वेस्टमेंट पोटेंशियल और 64,000 इसमें डायरेक्ट एम्प्लॉयमेंट जनरेट होगा. इसमें इलेक्ट्रॉनिक्स, टेक्सटाइल्स, फूड्स एंड बेवरेजेस, फैब्रिकेटेड मेटल, फार्मास्यूटिकल्स और मशीनरी एंड इक्विपमेंट पे इस प्रोजेक्ट में फोकस रहेगा. और इसका ये बेसिकली जो ईस्टर्न डेडिकेटेड फ्रेट कॉरिडोर है जो कि कंप्लीट हो चुका है अब, इस डेडिकेटेड फ्रेट कॉरिडोर के ऊपर established है.
Right, that of course is the Railways Minister laying out the Cabinet's proposals and decisions. Richard, we're going in the last 20 minutes of trade. A couple of standout stocks. What's the trading on Trent this afternoon? Is there any opportunity to still make a buck? And NBCC, because that one too has had a good run on back of that bonus issue.
So the broader trend for Trent is still bullish. There's no doubt about that. But I think the momentum readings on the lower time frame chart are a bit in the overbought zone. So that should get cool off either with some consolidation or a minor pullback move towards that 7,000, 6,900 mark again. So I would advise a buy on dip strategy for Trent rather than chasing at current levels. But any existing long positions are there, then they could continue to hold on because there are no such signs of trend reversal on the higher time frame chart. It's just the lower time frame charts indicate that some pull off is possible before the next leg of up move. NBCC looks quite positive from a positional perspective. We have seen a good time-wise correction in the last 1.5 months. But in this entire consolidation or the time-wise corrective phase, the stock did not break its important midterm support, which was around 160. So that remains a very crucial support level for the mid to long term as well. So I think here one can keep a strategy to gradually accumulate the stock since it is already up by 10% now. So buy some at current levels and keep some room that in case if we get any dip towards that 180, 170 range, then one can look to add further at those levels. Positional supports are below 160 because those are the major supports, or trend reversal levels we can say. So till that support is intact, I think it's now better to take limited exposure over here and keep some room that if we get any dip, then one can add more positions over there.
Vijay, you want to come in on this one? This is completely a tactical call. NBCC's got a board meeting on the 31st of August to discuss the bonus issue. Between now and then, the stock has already ran up 9%, but it was up 17% in midday trade. Tactically, would you buy this between now and then? I know it's a very short time horizon, but the event is what I'm looking to play. Vijay, you're on mute. I can't hear you.
Samina, I won't recommend that one should jump and buy stocks which are already 10% up. So markets will always keep on giving you opportunities. There would be stocks, there would be sectors which would be always juicy. But I don't think that why to jump and buy, because markets are at all-time high, and why not pick up stocks which still have value or they have corrected or consolidated? Why not go there? So I would not recommend buying NBCC at this point of time.
Okay, not a buy on NBCC. Ruchit, let me come to you with regard to charts. NBCC looks interesting. It's made a very strong move.
Yes, the chart sector looks positive. No, as I think we spoke that 160 position is a very strong support. So till that support is intact, the broader trend for the stock is still positive.
Okay, sure. Got it. Okay. Apologies for that. But let me quickly roll forward. We've got, of course, a trend in focus on the back of that Bernstein note. What Bernstein seems to be suggesting is that you've got strong traction, especially on retail rather than restaurants, Samina. So Bernstein seems to suggest they've firstly initiated coverage on 7 stocks. Okay, of which 4 are outperform,
which
2
are the 7
underperform.
That they have apart from Trent?
So DMart is an outperform, Jubilant Foodworks is an outperform, and Devyani is an outperform. They're quite bullish on some of these. Anything between 15 to nearly 30% in terms of returns is what they're looking at on some of these counters. Of course, the only one making the real move today is Trent. Out of that pack. They're more bullish though with regard to something like a DMart, because they believe that retail has a larger, historically has performed much better than restaurants have. So just on the basis of pure historical performance, they believe there's a larger opportunity available in retail, especially when you're going from unorganized to organized, and with larger brands.
And that's probably one reason why Style Bazaar is also, quoting at the valuation that it is. It is again in a segment that is rather unorganized, playing the 1 to 4 lakh per annum market in that sense. But Vijay, you want to come in on this one? You've already seen the run up on Trent, but DMart and which was the other one you said? DMart and Jubilant?
Jubilant, yes, and Devyani as well.
Devyani, DMart, Jubilant Foods. Any of the 3 that I mentioned that you'd look to add to your portfolio?
Well, I would recommend Devyani because it has not moved up amongst all the stocks talked about. But I would again say that these are great companies to have in a portfolio, but not right now. Why to just jump and buy? Wait for a correction. Markets would correct eventually. So I am a great fan of value, as I said earlier. So let's wait and let the stocks correct. Probably, maybe we can see some correction in Avenue, Jubilant, and as well as Trent. These are great companies again, as I said. But amongst the 4, I think that Devyani is one I can recommend to buy, but not valuations which are stretched at this point of time.
All right, Ruchit, any of these on charts, especially I'm not sure if we took your views on Trent.
Yes.
Trend, I think we have spoken about.
Sure.
So I think I had recommended to keep a buy and dip approach for that. So if I do some comparative analysis, then there's no doubt the strongest one is Trend. But again, as I would reiterate that it's a buy and dip stock, then in the lower time frame momentum readings are a bit overbought. So let there be some cool off period, and if you get any kind of dip, then when it comes around the support, those should be the good times where one should look for buying opportunities.
Ruchit, the other few that I want to pick up is look at Hudco. It's up 4.5%. You've got IEX that's up 4.5%. BSE is also looking very good. When NSE is going to go out and try and get an IPO and approval, it's BSE that's getting excited this morning. Anything on the 2-3 names I just mentioned?
So IEX is looking positive technically. We have seen a long period of underperformance in the stock as well. The previous all-time highs were right in December 2021. And since then, the stock has gone through a decent price-wise corrective phase and also a time-wise corrective phase. Now, if I look at a bit midterm charts, then the stock has again started forming a high top, high bottom structure, which indicates I think the worst time is behind this. So I think the downside seems to be very limited here on. The 40-day exponential moving average is a good support base for the stock, which it has not been breaking since last few days. Now that level is around 185. So if one is looking from a positional perspective, then at current levels also one can create fresh longs with stop below 185. We expect target somewhere around 225 to 230 range.
Okay, talking of exchanges, both BSE as well as the other one that comes to mind is MCX. Very, very strong commentary coming from MCX. That's the other piece that's moving today, 2.5% higher. Vijay, let me come to you. With regard to exchanges, of course, there's an NSE IPO on the way, on the cards. BSE has seen a stellar move over the last year and a half. And MCX, do you believe that this space or any particular name stands out for you, both valuation-wise as well as performance-wise?
I think BSE is the oldest exchange in the country. And definitely, there is a lot of action within the sector whenever there is a big IPO coming. So NSE, if it is cleared by SEBI, I think that BSE would definitely react to it. The kind of additions which we have seen, of customers in the last 4-5 years, it is stupendous. I think that BSE has the potential of going up to 3,100, 3,200. So I still see an upside of close to about 300 to 400 rupees even from here. And BSE is one of the strongest contenders even today in the markets. There's a technical gap also. So, according to my understanding and theory, this gap would be covered. So I think if this gap covers, we'll easily see BSE going up to 3,000. So BSE, I would, recommend it would be much over MCX, which has moved quite a bit.
Ruchit, one sector that has been conspicuous by its participation has been Bank Nifty. Time and again, we expect it. It gives us signs of participating and then fails to do so. Today being case in point. Do you feel like maybe it's not a bad idea to pick up Bank Nifty right now because the participation has to come? It's only a matter of days now.
But I think I would still wait for some momentum in the index heavyweights, because if we look at the stocks such as HDFC Bank, Axis Bank, State Bank of India, these are some names which all these heavyweights have been still in a consolidation phase. So it doesn't seem that the momentum would picking so soon. So maybe after the expiry, if we see some good rollovers on the long side in the banking space, then at the start of the next series, maybe a good time to do some bottom fishing in the Nifty Bank Index. But at least for today and tomorrow, I would wait for either a breakout in the Bank Nifty Index, either above 51,500, or some good momentum or price volume action in the index heavyweights before taking a trading bet on the long side in the banking space. It's not that the trend is negative. It's not negative, but there has been relative underperformance. So opportunities are better elsewhere, from a trading perspective.
All right. Views on the Bank Nifty, but let's switch focus from banks to pharma. That's the other sector which is a buzz today. Hit a life high today. And it's one of those which have aided the Nifty 50, especially something like a Divis Labs stood out. Varsha joins in with what's working for the sector. Varsha.
Well, thanks Hersh for that. So if you see in last 1 month, Nifty Pharma Index have been doing really good. It is up almost 6%. In last 6 months, it's up over 20%. Now let's see what are the key triggers for this rally. One is all the pharma sector as a whole. The pharma companies did give good Q1 FY25 numbers, which was led by strong domestic market performance. So India's growth exceeded expectations because of the good volume growth that these companies saw. Lupin, Sun Pharma, Torrent Pharma and Zydus reported strong performance in India. Also, there were some pretty good new launches which actually helped these pharma companies. With also, there was lower price erosion which was seen in the US, which helped these companies. There was also gross margin expansion through cost optimization strategies that these companies did. Now, let's talk about the other trigger which led to this good revenue was US business. So, they maintained momentum with new launches in the US based business, and there was single-digit price erosion versus a double-digit price erosion which we have seen in the last few quarters. Now, from double-digit to single-digit, this has helped in a good sales realization for the pharma companies. They've also increased focus on complex molecules, which actually has helped their EBITDA margins as well. Also, one point that has been exciting the street is this US Biosecure Act impact. Now, Indian drug companies will benefit in the long run if this act will pass. Now, what does this mean? This act would restrict US federal agencies from procuring equipments and services from certain biotechnology companies of concern, primarily some large Chinese pharma companies. So, in short, this is nothing but China plus one policy. Now, Piramal Pharma, Syngene International are bullish if this on this act, and Indian pharma companies will actually benefit if this act will be passed. Let's see what lies ahead for the pharma companies. This is the reason we are seeing, the uptick in the pharma, because street is actually baking in what's the future for these pharma companies. So let me put out guidance for the few of the pharma companies, starting with Glenmark Pharma, where they're targeting consolidated revenue for around 13,500 to 14,000 crore with EBITDA margin ranging of almost 19% in FY25, and they're targeting double-digit PAT margin in FY25. Speaking of it, Aurobindo Pharma, they expect revenue run rate of around $815 million US. They're expecting mid-teen profit margin when it comes to Europe, and they're maintaining their EBITDA margin guidance of around 21 to 22%. Lastly, if you talk about Lupin, they're planning to launch few of the products which will help to aid growth when it comes to US business, which will see launches in inhalation, injectable and ophthalmic products. Also, they're expecting 15% growth in a US sale over FY24 to 26, taking it to almost $1 billion US.
All right, Vijay, let me come to you on this one. First off, thanks, Varsha. Constructive on pharma, Vijay, is that at all on your mind?
Well, pharma companies have done a fantastic job, no doubt about that. One reason is that, markets have been around here since quite some time. And whenever markets are at their peaks, so money chases a lot of conservative sectors. So, we are seeing an action in IT. We have already seen an action in the pharma names. So I think that, there are possibilities, even I think that stocks like Mankind Pharma, Eris Life Sciences, even Lupin should do well, with the short to medium term. So these are companies which you keep on buying on corrections, and they will give you opportunities, to enter and exit both. So I think that pharma and IT both should be, sectors to watch. Number one. Number two, the dollar is very, very strong. So whenever, we see strength in the dollar, so these are exporting companies, mostly IT and pharma. So they get the benefit of high dollar or strong dollar. So I think that, pharma, IT would be in focus for next, few weeks, because, markets are on a tizzy. Really, there are no reasons for it to go up. We are talking about 100, 200 points on Nifty. They might, maybe touch, the market might touch 25, 200, 25, 400, and then what? So money would definitely chase the conservative sectors, and pharma, IT are some of those.
Vijay, sorry, I just quickly want to ask you or have your take on one piece. 36%, that's the move that Nifty Pharma has shown year to date. It's gone from 17 or probably sub 17,000 to where it is today at nearly 23,000. Do you believe there's still value in this at this point from a medium-term perspective? You've given us the short-term outlook, maybe a couple of months, some bit of traction, but let's get to 2 years maybe.
Yeah, so there would be corrections. I advocate this, that whenever you want to buy, even if you want to buy now, this is what I was saying about people who have already entered pharma. If you want to enter afresh, wait for a correction. Even a Divis Lab, if it is available at around 4,600, it's a great buy. Dr. Reddy's, Lupin, Glenmark Life Sciences. So these are companies which are portfolio companies now. And I think that for some time, because globally markets are hitting all-time highs, so there would be confusion over where to invest. So IT and pharma are conservative sectors. That's the reason why I am advocating that in any correction, any fine day when you see the market correcting, buy a Dr. Reddy's, buy Lupin, buy Glenmark, buy Eris Life Sciences. In a correction, I'm saying again, buy a Divis Lab. So don't just jump and buy again and again. This is for sectors across. If you have money, keep it with you, or buy a silver ETF or a gold ETF. If you don't know what to do. But wait for correction. Buy always in corrections.
Well, very quickly, Ruchit, we are wrapping up this edition shortly. We still have 5 minutes to go. Any buy today, sell tomorrow calls for our viewers, or sell today, buy tomorrow?
I think for buy today, small sell tomorrow, Alchem Laboratories looks positive. So it has given a breakout from a bullish flag pattern, which indicates a continuation of the up move. So one can take fresh bets over here with stop loss below 5,920 and expect target somewhere around 6,140.
Ruchit, that is, of course, a buy call coming in on Alchem Labs. Very quickly as well, I don't know whether we've discussed this already with you, but anything in the metal pack that looks semi-constructive at this stage, or it's best avoided for now?
One can take a stock-specific approach within the metal space. And if I look at all the stocks, then Hindalco is one of the stocks which is looking the strongest. It is now trading around its previous swing highs of 712 to 715. And if we get a breakout above this, then I think the stock has potential to rally towards 745, 750 in the short term. So even if you look at the recent up move which has been seen, after that fall in the dollar index, then Hindalco is one of the stocks where relatively the up move has been more stronger. So Hindalco is looking positive. Any existing long positions that one should hold on. And fresh buying, I think above 713 or 714, which was the previous high, one can take a fresh exposure on this.
Ruchit, while we're at it, Divis Labs, is that at all on your radar? Because stock has flown away in trade today.
Yes, definitely. The price up move has also been supported by good volumes, in fact, today. So, in fact, we are talking about that pharma names. I think the entire pharma space is still looking positive technically as well. Alchem already have recommended, which is one of the pharma name for BTST. So, even DVs, I think, the stock would continue its up move towards 5200, 5250 in the near term.
And let me go across to Vijay. Vijay, your quick take on auto, this entire move with regard to the new policy coming in. You believe that it's a structural uptrend for auto from a 3-year perspective, maybe?
Good. If we are going to see scrapping happening, actually, then, I think that the best pick in the auto space right now is Tata Motors. Another company I like in this space is SML Isuzu. It has been consolidating quite a bit and trading close to about 2,000 rupees. But I think that it can definitely inch up and go towards 2,300, 2,400. And MSTC, because MSTC is one company which is going to get the benefit of all the scrappage, and it's going to make a good bottom line on this. MSTC has a tie-up with Mahindra's as well. So Mahindra and MSTC have joined. They have collaborated to open a company, and then a lot of scrappage is going to happen in this company. So due to this policy, I think MSTC, Mahindra, Tata Motors, as I said, in this mid-cap space, SML Isuzu looks good.
Vijay, Ruchit, thank you for joining us. Very surprisingly, we started this last out of trade with the market at a new record high and trading much better than most other global markets. But surprisingly, we are going home where we pretty much started. We are not closing at a record high, even though an intraday high was made in the day. We are closing just about levels of 25,000. Now, maybe our opening in Europe, this could be attributed to, I'm not sure how Europe is opened up, but maybe that's what we are reacting to. Profits have been taken off the table. We are closing around 25,000 as we see it. Europe's got a positive start. So surprisingly, our markets have done a bit of a U-turn and given up nearly 100 points from the day's high point, and all this has happened in the last 30 minutes. Bank Nifty continues to stay out of the celebratory mode, down 0.5%, and the broader markets have also seen selling pressure. So mid cap, small cap and micro cap, they weren't having the best day ever, but they still go home with cuts. So profits have been taken off and they've been coming off from the large cap index. 2541 is where we are going home with. Hopefully it does close with a marginal uptick, just like we saw in yesterday's day of trade. But let's not forget that till 3 o'clock, the Nifty was trading at a new record high. Across the breadth, there was some deterioration that happened. So when we opened the last hour of trade, it was largely a 50-50 picture. By the time we closed shop today, it seems like there have been more stocks that have sold off than actually gained. IT did well. You had LTI, Mindtree, Wipro, Infosys, so frontline legacy IT companies continued or have gone home with significant gains this morning. Pharma companies cooled off from the day's high point, but still have gone home with gains of about 3%. RIL has turned negative before its earnings, and consumption names and banking names saw selling pressure. Even in the broader market universe, NBCC was trading with a gain of 18% on anticipation of a bonus issue, finally going home with a gain of about 6-7%. So lots of profits being pulled off the index, and no surprises there, right? The markets look like they have had a good run. run, and we've had 9 straight days of gains. So that's what you want to be slightly more mindful of. But without Bank Nifty, a new record has not happened once again. With that, it's time to wrap up India Market Close. Thanks for watching.
capex is expected to have. एक बार मैं देख लूं सारे, उनको बोलो ना एक बार चला देंगे सारे ग्राफिक्स। Q1 FY24 नहीं ये कुछ गड़बड़ है। नहीं एक सेकेंड में ना वापस आती हूँ, कुछ गड़बड़ लग रही है मुझे ग्राफिक्स में जो दिखा रहे हैं। 6 पॉइंट ठीक है, और सेकेंड एस्टिमेट 6.8 6.5 ठीक है, नहीं 7 ठीक है। एक सेकेंड, हाँ एक बार इसके पिछला वाला। मैं आती हूँ, मुझे 1-2 ग्राफिक्स में कुछ गड़बड़ लग रहा है, मैं आती हूँ।